What's up guys, Thomas Feng with Bay Area Connect. This week we're doing a video about a lot of the new loan updates that are going to be coming to the loan market this year. This week again we're joined with Joe Lima of Princeton Capital. Why don't you give us an update on rates, Joe?
Yeah, Thomas. Alright, interest rates range that I'm going to give you is for a 30-year fixed on primary single-family residence with 0 points. So a conforming loan amount's up to $417,000. You're going to see an interest rate range between 4.875 and 5%. For a loan amount of $417 to $729, $750, you're going to see an interest rate range between 5.125 to 5.25%. Jumbo loans from over $729,000, you're going to see a rate between 5.625 and 5.75. And then FHA loans, you're going to see a rate between 4.875 and 5.125, just depending on loan amount.
Thanks for the update. For many borrowers right now, they've been noticing obviously the great rates, but loans definitely are harder to get these days. Just a statistic to throw out, the Mortgage Broker Association reports that in 2005, loan originations were at $3 trillion. Last year, however, we were down to $1 trillion. This just shows how hard it is to get a loan these days. But Joe, let's jump right into today's topic. What are the new updates that are going to be coming to the loan market this year, and how will these affect the buyer?
Well, some of you know that the loan market has been getting tougher and tougher, and there's been some drastic changes over the past couple of years. But recently we've hit a plateau where things have kind of leveled out and the new normal has hit. But there's some new changes that are coming on the horizon for 2011. So it's imperative that some buyers that are on the fence start to move forward and get things processed and maybe get into contract before these changes come into play, because it will affect your pocketbook.
Right.
One of the first changes to shoot out of the gate is going to be with Fannie Mae and Freddie Mac. They are going to be changing up some of the fees that they assess on loans. So when they're charging new fees to the lenders are going to turn around and charge the fees right to the borrowers. Some of these fees include how interest rates are determined. Currently, a borrower with the 720 FICO score or above doesn't really have a hit to their interest rate. Fannie Mae is looking to implement some sort of fee to those type of borrowers as well. So they will be hit, and in turn it's going to come out of the consumer's pocket.
It sounds like before, and when you were getting a loan, basically if you had a higher credit score, you would get better rates or maybe even a discount at that. But with the upcoming changes from Freddie Mac and Fannie Mae, even if you have the high credit scores, there will be some additional costs for the borrower.
They may see that through closing costs or through the actual rate.
Right. Well, what about FHA loans? How are those going to change?
FHA loans looks to be one of the more drastic. Right now you can get a FHA loan with 3.5% down. That is looking to go away, and it's going to have a minimum of 10% down. Again, this isn't something that's official, but it looks like it's going to change sometime this year. So a minimum of 10% down, that's going to put a lot of the first-time home buyers out of the marketplace.
Right. So if you are looking into a FHA loan, definitely get in contact with either Joe or another professional loan agent who can break down an FHA loan for you and let you know the costs associated with that.
Another change to the FHA is there's monthly mortgage insurance that goes along with an FHA loan. Mm-hmm. There's also an upfront mortgage insurance, which is 1% of the loan amount. FHA's monthly mortgage insurance looks to increase by another 0.25%. So that's going to in turn reflect about another $100 costs a month to the buyer.
Right. And with all these new loan changes coming up, will we see any changes to the loan limit amounts as well?
Yep, that's another thing that's coming into play. September 30th is when the loan limit, the temporary increase of loan limits expire. These are based on county. Santa Clara County is going to be one of the highest ones. And currently, like I was saying previously, for the loan limits, 729, 750 is the breaking point between a conventional loan and a jumbo loan. That is supposed to tier back to 625, 500 on September 30th, unless there's another extension that happens. Mm-hmm. So if someone's looking at buying $1 million property and wants to take advantage of the lower conventional loan rates and approve guidelines for approval, they would have to come in with a 40% down payment versus a 30% down payment. So again, more money out of the consumer's pocket.
Right. And these changes will come into effect around September, you were saying?
Yeah, September 30th.
Great. So one of the biggest real estate news to hit recently is the addition of the Dodd-Frank Act. Joe, I know this is brand new, and we'll definitely keep you guys updated as changes come, but why don't you give us a brief overview of this new act?
The new Dodd-Frank Act is in place by the government in order to regulate how loan officers are compensated. Basically what the government is trying to do away with loan officers that will steer a client into a specific rate, loan program, or loan amount so they are compensated at a higher level. What this in turn will be is the loan officers, no matter if they work at a bank, a credit union, or a small direct lender, their compensation is all going to be changed. So in turn, it may be a higher rate or a higher cost, again, to the borrower.
Right. And again, we'll keep you updated as things change with this new Dodd-Frank Act. Today, we've talked a lot about the changes that will be coming to the mortgage market this year. Fannie Mae Freddie Mac will be changing their guidelines. FHA will also be changing with the loan limits as well. Do you see yourself getting a loan this year to buy a home? Would you like to get a loan before all these changes hit or after? Feel free to discuss this with us and connect with us on our Facebook at facebook.com/Bay Area Connect. Thank you again for watching, and we'll keep you updated. Have a great day.